Wage growth declines. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. I've got my afternoon stein of coffee and I thought we would have a look at the latest news that has come out about wage growth here in Australia. This is a piece written by Stefan Leitz from the ABC, and it's how our wage growth has slipped to an increase of only 2.2% this quarter. Now before we go through this article, let's just jump and have a look at a couple of things. This here is showing from Trading Economics. The wage growth is now down from 2.3% in the last two quarters. It was at 2.4 and below that 2.3 and then 2.1. So we've dropped down a little bit. Let's jump out to 10 years and you can see how much lower it is over time. We're actually, if we go to the max data, we're definitely below trend. Wage growth has been below trend. And I recently did a video about the RBA essentially giving up on hopes of wage growth. And that was one of the reasons why they made such drastic cuts to the cash rate. 3 cuts in quick succession made a big dent in consumer confidence, and while it has jumped back up, we can have a look here, and I'll talk about that later today. Consumer sentiment has climbed up. It has been trending down, as you can see. And I frankly, I think a lot of that is to do with the signals we've received from the Reserve Bank and their attempts to try and lift up wages. We can see it's not really working, is it? It's not really working. So, Australian workers' wages have continued to stagnate below long-term growth rates, and if anything, have showed signs of further weakness, with average pay packets rising just 2.2% over the year. Now, when we're talking about wage growth, we need to think of, just have a look at this data from the Observatory of Economic Complexity, and just look at the different sectors of our economy that we're exporting, particularly iron ore, coal, petroleum, the mining sector, because that's one of the big portions of our economy that flows through to all of the others. And we also, let's just have a look at Brazil. And let's compare Brazil, the second largest iron ore producer in the world, to Australia. Look at the variety, what they're producing, the complexity of their economy is 0.61. They're 37th in the world. Their exports are 219 billion, where ours are 243 billion are exports, but our complexity is 59th in the world. So we're 0.09. Just look at that difference, okay? And bear that in mind when we go through the rest of this article. I would argue that Brazil is able to handle changes in demand for iron ore much better than Australia is. Much better than Australia. So in seasonally adjusted terms, wages rose by 0.5% in the September quarter, down from 0.6% in the June quarter, and taken year-on-year growth down from 2.63% recorded in the last figure. So year-on-year growth is down. Wage growth continues to be mirrored well below the long-term average of 3.2%, a level not seen since late in 2012. The rate of annual wage growth eased slightly in September after being stable over the past year, continuing to grow at a slightly faster rate than consumer prices over the past year, the Australian Bureau of Statistics chief economist Bruce Hockman said. The largest contributor to wage growth over the quarter was jobs in the healthcare and social assistance industry. And as we looked at the last time I discussed wage growth, a big portion of that has been in the public sector, in the government sector, because even a lot of the healthcare jobs are indirectly related to government. The result can be seen with public sector wage growth of 2.5% continuing to outpace the private sector of 2.2%. The results are particularly disappointing as the September quarter numbers generally reflect new enterprise bargaining agreements, as well as the Fair Work Commission's annual wage review. And you can see here, and here's the public versus private wage index, and the red is the public sector, their growth. And I mean, look at that. Look at that difference there. From 2014, the public sector has significantly outperformed the private sector. Significantly. So that's obviously pulling up our overall wage growth. What do you think about that, guys? What do you think about that? And I will just zoom out here so we can see all of this in this view. Key sectors the weakest. Worryingly, 6 of the biggest employers, including retail, manufacturing and construction sectors, saw yearly wage growth increases below 2%, barely above the current rate of inflation of 1.7%. I mean, retail employs 10% of the nation's workforce. Manufacturing and construction, well, they would be spurred on significantly by the mining sector in many ways, and the housing sector as well for construction, which have both taken hits. And when we have a look at Australia on our export ratio, proportions, slowdown in these resources from overseas is going to flow through to the other parts of the economy, first to miners, and then constructions and machinery, engineering firms, and then that trickles through to housing and to retail. So private sector wages, which better reflect market forces, well, I would say they only reflect market forces. We can see from this chart here, and I'll change to a color that you can see, we can see to this chart here that the public sector is in no way reflecting market forces. Look at that. Look how much higher it is. That's crazy. So better reflect market forces and economic conditions remain weak across the board. Indeed, Asia-Pacific economist Callum Pickering said. Victoria reported the strongest wage growth over the year, up 2.8%, although a large part of that was driven by large pay increases awarded to public sector workers in the June quarter. New South Wales wages grew by just 2.2%, despite a solid increase in public sector wages once again, while Western Australia still endured the weakest result, with pay packets up just 1.6%, a level it has been stuck at for 5 consecutive quarters. City economist Josh Williamson said weak wages growth stuck around current levels will do little to fire up consumer spending. Well, I can guarantee that. I mean, we looked at a previous video where economists were critical of the Queensland government just handing out free money to all the public servants, because most of it will be used to pay down debt, honestly, which, frankly, I cannot blame anyone for doing it. If you're a public servant and you're getting a wage increase, pay down the debt, guys. Get rid of it. Live cheaper. Let me know if you've received a pay increase, what you have spent it on. Gold, crypto, silver. I'm sure there are other things. Previous periods where the unemployment rate was 5.2 to 5.5% would have been associated with private wage cost index growth around 3.5%, well above the current growth rate, Mr. Williamson noted. Well, this is all, there's a few issues you need to consider here as well. Just the cost of employing people in Australia, the red tape, and then the incentives that creates for people sending work overseas. I've seen it in my own industry. You can have a look here. Look at mining. Quarter on quarter change is quite low. Year on year change, yes, it's over. Oh, crap, it's only 2.1. Who's the worst here? And that is information, media, and telecommunications. Well, there you go. We've got retail trade not doing very well. And this is year on year. Quarter on quarter, finance and insurance is the lowest. I wonder if all the bonuses people didn't receive has got something to do with that. Well, guys, this is, all industries. Well, all industries will have a look. Quarter on quarter is down, and overall, it's, if I can do on it something, you can see that it's pretty low. Other services, do they have architecture? Construction, that'll be what we'd be in. Year on year, yeah, that's a bloody straight line, isn't it? Guys, doing with the mouse. But you can see how low those sectors are. So, a good piece here, addressing some of the issues. Wage growth edged down again in September quarter and was largely propped up by the public sector, health sectors, pay increases. So, is Australia turning into a bedpan economy, guys? Can that sector last? In the private sector, the largest wage rises were recorded in accommodation and food services over the quarter, while the financial and insurance sector saw the weakest growth. While in line with RBA forecasts, the weak result increased pressure to cut rates. So we're getting more pressure for rate cuts. Will any more rate cuts make a difference? Or will that push them to use quantitative easing, or other more extraordinary methods of stimulating the economy. What do you think they could do? You know, maybe they need to up the minimum wage, guys. I'm sure that won't have a flow-on effect for cost of livings. It'll be interesting to see what happened. And people are going, why is wage growth so low? Because fundamentally we're not producing anything anymore. We're exporting a lot of stuff and we're not adding value. Our economy is simply very primitive. Very primitive. If the demand for some of the more primitive resources that we're exporting reduces, there's going to be a flow-on effect. Most of our growth and wealth, 57% of it, is in housing. Just think about that, guys. Anyway, thanks for watching. Like, share and subscribe. If you enjoy my content and want to help me produce more, I have a Patreon and Subscribe Star where you can make a small monthly donation. I also have affiliate links with Amazon and eBay where I receive a small kickback if you make a purchase. Doesn't cost you a cent extra. Otherwise, just simply sharing and liking the videos helps get the word out so more people can get another perspective on the news that we're fed. Take care, guys. Have a great day, and I will talk to you later. Bye for now.